Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to the Accountant's Minute podcast, where we're going to discuss the future of accounting, because this was the theme of issue 397 of Accountant's Minute. This particular podcast is directed at accountants, bookkeepers, business advisors, who are supplying services to SMEs, small, medium enterprises. If you're a big four firm partner or an accountant working for them, you might not see the significance of some of the matters we're going to discuss in this webinar, but they are significant. They are very important. According to the Office of the Australian Small Business Promoter of Services, there are over 2 million small, medium enterprises in Australia. Is it time to expand your services to meet the needs and desires of 2 million businesses around Australia? We have a high failure rate. Bankruptcies are increasing. Insolvencies of companies are increasing. Could we, as a profession, have done more to assist our SME clients to run better businesses? Have you heeded the warning given by the now retired tax commissioner, who was also a former partner of KPMG, so he knows something about the accounting industry, Mr. Chris Jordan, who warned 2.5 years ago now that if your reliance was on high volume, low margin tax return work, it is unsustainable. His message was very clear. I don't think you could get it any clearer, actually. If your business model was high volume, low margin, and focused on simple tax returns, it will not be viable in 3 to 5 years' time. Well, if Mr. Jordan was making that statement today, I think he would say, will not be viable in 6 months to 2.5 years, because that's what's now happened. 2.5 years have gone by. So we're now in the beginning of this great transition that the tax office has forewarned us about. Now, even if they're a year or so out in their forecasts, it's still going to make a significant difference to a lot of people who provide services. But it's not just the firms that fall nicely into the category described by Mr. Jordan, with a business model of high volume, low margin, and focused on simple tax returns. Because if those accountants and bookkeepers have already moved, and I hope they have, because they were given the warning, and I know quite a number of them have moved to establish themselves in a wider range of services. They've become subscribers to ESS BIZTOOLS and perhaps to other package providers also. In doing that, they have gathered new clients, business clients. So what's that going to do to some of the bigger firms that thought that, well, we aren't quite in that category of high volume, low margin, simple tax returns? But you could find some of your clients have now been approached and have decided to go to the new guy who may have previously been supplying this type of service, but the new guy who has grasped the opportunity to supply financial, commercial, management accounting advisory services to his clients, some of which could come from larger firms that thought this wasn't a problem that you had to worry about. I think it is. I think it's a problem for all accountancy firms servicing the SME market. And there's thousands of those firms. I think the solution is to start your transition to advisory focused services that allows you to be seen as a trusted business partner with your clients, which was also part of the terminology that Mr. Jordan used in his initial address at Xerocon 2022. In addition, 397 Accountant's Minute, we introduced you to the advisory intro package. So please let me just go through on this podcast and talk about it. It's been specifically designed to assist accountants, bookkeepers, and business advisors to introduce financial, commercial, management advisory services to SMEs, particularly if you're wanting to expand your services beyond the basic compliance services. This is a great starting point, and you can add on in the months or years ahead if you wish, because ESS BIZTOOLS has 4 packages, and it's like a set of stairs. You start somewhere, and the starting package is the advisory intro package, and then you can move up. And as you move up, the next package is called the starter package. It includes everything within the advisory intro package, plus more. The next one is the advanced package, and it includes everything from the advisory intro and the starter package in the advanced, and then it finally gets rolled into the financial forecasting package, which is the real chief financial officer service offering. That's how our program works, so that we're helping you to be able to offer advice to your clients, to perhaps to grow with your clients, as many of our subscribers do. I think it's important that there's year-round engagement, not just once or twice a year, or even 4 times a year to prepare the BAS reports. Businesses operate every day, week, and month. They operate for 52 weeks of the year. Now, sometimes the business might be shut for a so-called off-season, but invariably what happens then is there's repairs and maintenance, new capital works are done, there's still outgoings going on. But most businesses operate 52 weeks of the year. They might take out 2 or 3 weeks if they close down over Christmas to have everyone go off at the same time for 2 or 3 weeks to get their batteries recharged. But they're not only operating for a few weeks of the year when they may discuss taxation issues with you. So it's a year-round obligation. And if your client was a bit larger, they would probably be employing you or another accountant, of course, as the internal accountant. And that person would then attend to a range of activities that at this stage, most accounting firms that are delivering services to SMEs that are primarily built around taxation never get involved. But for larger businesses, that's very important. And that is the daily, weekly, monthly cycle. Your clients need it. They need to know that if a mistake's been made or an error's been made or fraud's been committed, that they fix that problem immediately so that it doesn't continue for the rest of the financial year, which may be another 51 weeks. And then think about what happens. At the end of the financial year, you do not immediately prepare the annual set of accounts and a tax return, do you? It may be 4, 5, 6, 7, 8, 9 months later. And I've heard some firms are even going longer than that. And that's when the client finally gets a set of accounts. And let's say there was a problem back in week 1 of the financial year, but it wasn't picked up. It wasn't picked up because no one was looking at it. No one with an accounting brain was looking at it and saying, gee, we budgeted to have a gross profit percentage of 38%, but we've only achieved 22%. Why? What went wrong? We need to find out the answer. And that's why our very heavy emphasis is on the 52-week business enhancement system. And the key report is the weekly performance and profitability report, and the attached key performance indicators and business metrics. That's what the business operator needs. I was company secretary and chief financial officer of a listed public company. We were a major player in the meat industry in Australia. Meatworks, retail butcher shops, small goods factories, cold stores all over the place, all sorts of things. We even experimented at one stage on preparing daily profitability reports because of the importance of a particular product we were producing to be exported to a foreign country. We did daily reports, but normally we only did weekly reports, so that the general manager of that meatworks received a report from the accounting team to say, this is how we traded in the week that finished 2 days ago. It was what our retail butcher shop managers were given, and they would sit down and discuss with their area manager. We had an area accountant in each area. And my team at head office used to receive all this information from about 500 business activities, consolidate it all and submit it to the CEO on a Wednesday at around lunchtime. And his first question would be, Pete, give me the ones that haven't met the targets. And unfortunately, there always would be 6, 10, sometimes even 20 of them. And I'd give them to him and I'd have them in areas. And he would immediately be on the phone to the area manager and say, now, have you talked about this? Have you sorted out what went wrong? Why did the gross profit percentage only come in at 22% when the expectation was 38%? That's what the budget was. And hopefully the area manager had the answer. He'd already looked at it because he'd had this information nearly a day in advance. He should have already conducted the postmortem. This is what big business does. I know that the whole of the meat industry in Australia does exactly the same and probably does it all around the world. But it's the way Woolworths and Coles and IGA, I've done some consulting work for some of the IGA store owners, and they do it. 46 departments in a store. They know within 36 hours at the end of the week how they've gone in each department, what the gross profit percentage was, what the indicative profit was. It's important because if there's been a mistake made, there's been fraud made, there's been errors made, they can get fixed straight away. Now, please sit back and think about your client who's out there. Let's say they're running a butcher shop or even a small meatworks. Who sits down and tells them their results for last week? If you're already doing it, congratulations, keep it up. But when I talk to accountants about this, who are used to dealing with SMEs on the preparation of tax returns, I get strange looks. Oh, we don't need to do that, Peter. I had a situation about 3 or 4 years ago where I was doing a presentation for Oz Industry on directors' duties and responsibilities. They hired me to go around Queensland to all the mining towns. And we had about 44, 45 people in this audience. And as part of going through a company director's duties, I mentioned being aware of the debtors' days outstanding and asking questions of the CEO and the chief financial officer, or the accountant, the office manager. What was the debtors' days outstanding? And a lady at the back put up her hand and said, well, what should the debtors' days outstanding be? I said, interesting question. What is your debtors' days outstanding? She said, I don't know. That's why I'm asking you. I looked at the back of the room and the caterers were getting ready for morning tea, so I thought now's a good time to have a break. I want to have a yarn to this lady, but I don't want to embarrass her in front of this group, many of whom she knew. So I called it time, we'll have morning tea, go for a bit of a stroll. I went up to this lady and I said, well, what's your position in this business? She said, I'm the office manager. And I said, you don't know the debtors' days outstanding? No. Do you know what the debtors' balance is? Yeah, I know that. What is it? She gave me a figure and I thought, must have a big turnover, this business. And I said, what's your turnover? She said, between $8.5 and $9 million. I quickly calculated the debtors' days outstanding and it was 102 days. I said, doesn't your accountant ever talk to you about this? Oh, well, we never actually see our accountant out here. Our accountant's back on the coast and, we go down there to see him in the city that he's in. And no, he never asked us about debtors' days outstanding. She made a comment, I don't think he really looks at the balance sheet. Whose business is this? She said, my father's. Does your father ever get cranky? Oh, yeah, when the bank manager rings. I said, I can understand that. 2 weeks later, 2.5 weeks later, I happened to be in that other city. I'd been running a seminar and this particular accountant, I knew who it was there. And he said, oh, you've been out so-and-so running some seminar and talking to one of my clients. I said, yeah. I said, I was a bit curious that she knew nothing about debtors' days outstanding. I said, you'll never talk to her about it. He said, no, that's not my worry, my responsibility. That's theirs. It's spelled out in my engagement letter with them. I said, but it was 102 days. He said, was it? He had no idea. He never calculated it. Now, I don't think that's good service. I told him that. I don't think that's good service. I don't think that's what our profession should be delivering to SME clients. We should be more upfront with them. And out of that, I'm sure work would have flowed, because from this engagement, I got asked by the owner of the business, this lady's father, whether I would review their debtors. And I said, yes, but I'll send a professional letter, a courtesy letter to your accountant. And I did do that. And we got that 102 days down to a lot lower figure. But what we also found out is there are other problems. So your clients need help. They need stronger relationships with you. So they appreciate that you can offer services to help them grow. So they'll need a business plan. They need budgets and cash flow forecasts and projected balance sheets, just as part of the annual service. But they must have an input into it, the business plan. And then the budgets and cash flow forecasts and projected balance sheets, which we now call the predictive accounting reports, are the financial interpretation of the business plan. This is what you agreed to in the business plan. This is what it means. But I really stress the need to make sure all of the leadership team are involved in the business plan deliberation, because it's very important at the end of the process, they all sign off on it. This is our business plan. Why? Because they are the key people to implement it. Not you. Now, you're going to be part of it, hopefully, if you're offering a virtual CFO service to your clients. But there'll be more than you and the leadership team. This is profitable work for you to undertake. I know it won't be for every client, but you've also got to pick your clients, because accountancy firms and bookkeeping firms also have to survive in these difficult market conditions. It will help you attract and retain top talent. This is one of the comments I get from accountants all over Australia. Oh, yeah, but Peter, we can't get the team members. I had a podcast with Andrew Geddes, who I consider as the guru of the Australian accountancy industry, one of the joint founders of the Financial Management Research Centre at the University of New England 40 years ago, who went on to become a well-known accounting industry consultant, delivered numerous seminars, and become the chair of Green Cross Limited, which become a major veterinary surgery and pet food business operating all over Australia. He was the chair of that for 10 years, and that Green Cross Limited became a top 200 ASX company. So it a real growth. And Andrew, in the podcast we presented about 14 or 15 months ago, and I'll be having another one with him shortly, said accountancy firm partners must realise they have to get the younger accountants directly involved. They have to sit in on interviews with the clients. They have to feel the pulse of the organisation. Just don't put them in a side room and give them tax return after tax return after tax return. Tax returns are important. I know that. I was the senior partner in an accounting firm, and they help pay the bills. But your clients need a lot more information. And one of the key things we've expressed in this particular Accountant's Minute is how quick you can get started, even with our basic product, the advisory intro package. I'm saying you could get started within a week. And some people, I hope, will prove me wrong and send me a note and say, we did it the next day, Peter. Setting profitable charge-out rates for tradies. This is our most popular product. The accountants that have got it want to keep it to themselves. They say to me, I'll rephrase that. Don't tell the others what we're doing. We want to get the big market share of tradies because we do their calculations on what their charge-out rates need to be to achieve their targeted profit. And then we prepare monthly financial accounts so that we can make sure we've looked at those key performance indicators and business metrics to make sure everyone achieved their productivity percentages. Because if they didn't, we need to change the charge-out rate calculator. You could start delivering that tomorrow. Break-even analysis for growth-focused businesses. A client comes to you and says they want to spend $300,000 to expand their business and start a new operation. This is what's got to go on. This is the minimum staffing. What's our break-even sales got to be? I find accountants can't answer that question sometimes, which quite surprises me, because if you're just doing tax returns, you're not getting asked these questions. But these are the questions your clients have got going through their minds all the time. Preparing businesses for sale or acquisition. It's not a matter of just going to a real estate agent and saying, sell my business. I want $1 million for it. There's preparation needed. We've got all that in our system. You just work your way through step 1, step 2, step 3. Now, some of it you can't fix. It might be, is the shop nicely painted and presented? Well, you need a painter to do that. The cash flow management and fiscal planning is also very important. Does your client understand how the cash flow management works? If you haven't read the report produced by the CEO of MYOB, and that was based on an article in the Financial Review in February last year, you should read it, because they did a survey of 1,000 small businesses that were their clients. And they found after 6 months, the ones that had just started, hit a brick wall. Why? Well, they'd miscalculated. They'd assumed that every supplier would give them 30-day payment terms, and got a terrific shock when they rang up the suppliers and placed an order, and someone said, yes, well, that will be $12,385. This is the bank account you've got to pay that money into. Oh, hang on, we haven't got the goods yet. No, we don't supply you till you pay us. Suppliers have been caught through businesses failing, so they've got a lot tougher. But what the MYOB report, authored by Paul Robson, their CEO, identified is that a whole range of people going into business did not know that. They had assumed they would get 30 days. And then we turn to the debtors. Some of the people said they thought they had to give anyone that asked for a credit account the credit. That's not right, of course. They should have been getting a letter, a form completed by the applicant, so that there could be some research as to who they were. Were they just getting someone else's problem? But there'd also been another assumption made that everyone would pay within 30 days. Australia's got the highest debtors' days outstanding in the world, according to a worldwide report. Now, that was made a couple of years ago, and at the stage, the Australian Ombudsman for Small Business, Kate Carnell, said, this is a national disgrace. And whilst it's true that the Morrison government, the Liberal Morrison government, and the Labor Albanese government have move to try to force the big end of town, turnover over $100 million, to pay quicker and to publicly embarrass them if they don't. Well, we'll see how that goes, won't we? And there's been instructions given to government departments to pay within 30 days. And again, we'll see how that goes. So we need to make sure that our clients who are running businesses or proposing to run businesses know the game rules. And they're not established in any official rules, of course, when people are going to pay. I only hope those people, when they did their planning, did not get advice from accountants, because if they did, they were very badly advised. And the other thing that people can get started on virtually straight away is there's government grants there all the time. And at present, because of cyclones, bushfires, floods, there's all sorts of other grants, government support issued through the state governments, most of it 80% funded by the federal government, that's available. So there's great activities out there that you can get involved in servicing your clients to run better businesses. If you would like to read the Accountant's Minute 397, please go to the ESS BizTools website, www.essbiztools.com.au, and on the homepage at the top, you'll see Accountant's Minute. Just click on that and you can download any one of the 397 editions that we have produced over the last 17 years. And I hope that that will help you. If you would like to talk to us about services that ESS BizTools can introduce so that you can offer these services to your clients and have some of the services being offered within a week of starting your subscription, so you recover your subscription very quickly, please contact us. And for those of you who are heeding the warning made by the former tax commissioner, so you were supplying the services to people at that lower end of the market who will now be able to directly lodge with the tax office, and that's what the tax office is encouraging, and you want to start building up your arsenal of products that you can supply to businesses, we've got a great offer for you at present. We have reduced the subscription for the advisory intro package by 50%. So for $499, including GST, less than $10 a week. Now, surely you can generate some activity to generate $10 a week. If you're serious about doing something to help your clients, but also to help your firm, you will be contacting us, going straight to our website and subscribing. This offer is not going to last much longer. We've introduced it to try to encourage accountants and bookkeepers and business advisors to be more forthright in offering services to the SMEs, because they need them in the current environment. We're discounting our package to help you to offer those services so that you can then help those clients. You'll get paid by your client, and hopefully they will survive in business. And if along the way you decide that you need to upgrade your package, which most of you I think will, that's great. You just contact us and we upgrade. And we will be contacting you within 24 hours of your subscription, telling you when your first training session's on and making sure you're getting out there. Because we want you to start offering services within the first week. Not in 6 months' time, 1 week. I look forward to hearing from you. Stay safe. Have a great day. Goodbye.